Welcome back to IPO's 2 for 2. I'm Al Beachum, associate broker in Michigan. And today we're here with Joe Crane, who covers the West Michigan markets. And Joe's going to share a market update with us. Welcome, Joe.
Thank you. Thanks for joining us.
3 topics today we're going to cover. We're going to cover new units, rental rate growth, and investment life cycle. What can you tell us about new units and the West Michigan market, Grand Rapids in particular?
So I'd like to do a little bit of time traveling today. We'll start out with the past. We'll kind of talk about what's going on currently and also what we see happening in the future. Over the last 2 years, 3,600 units were added to the market. Those were actually all absorbed, bringing vacancy rates to a historical 3.3% in Grand Rapids, a record, in fact. Presently, as it currently stands, new units are slightly outpacing demand, increasing our vacancy rates to about 3.5%. Still not a big deal. Looking into the future, we've got about 1,100 units coming online over the next 6 months or so this year. We expect vacancy rates to go just below 4%, still well better than the national average.
Grand Rapids being a smaller metro than others that are tracked, do you feel there's a risk of oversupply now or any point in the future?
Interestingly enough, historically Grand Rapids has had a little bit of a problem with absorption. They'd build a bunch of units and then summertime would come, vacancy rates would go into the 5 to even 10% range. As we see here, it's not happening anymore. It's really not affecting, which allows for developers to build more units. I think the market's strong and healthy and could use more units.
Let's talk about the biggest topic in the business right now, which is rental rate growth. What are you seeing in your market?
Sure. Like most markets, over the past decade, they've been pretty stable, 2 to 3% per year. The last year, rental rate increase has been to over 10%, especially in the first quarter of this year. We expect those to stabilize a little bit, probably 3 to 5% is where they'll end up, which is still great growth.
Do you feel that there's any risk of stunted rent growth downtown as we've seen in Detroit a bit compared to both state, regional, and certainly national averages, which are double digit in most markets?
Sure, there has been, we've been seeing trends in urban areas with rental rates definitely stabilizing and sometimes decreasing. Detroit, for example, is around 4%. Chicago is just south of, I believe, 10%. Grand Rapids is actually at 8.4% in the downtown area, which is incredible for an urban downtown setting.
Well, let's talk finally today about a topic which is near and dear to our hearts as investment brokers. The life cycle of an apartment investment in West Michigan that you've seen and sales transactions trends.
Sure. I've been working in the West Michigan market for, over 7 years now. We have historically seen a market that tends to hold. Investors tend to go long on deals. We are now seeing a lot more trading, which is great news for investors. For example, 2021 had the best 2 quarters in volume in the history of Grand Rapids since I've been tracking it. We as a firm have seen a great increase. We just closed 3 deals in the first quarter of this year, and we've got another 8 under contract. So we're seeing it as well, which is great news for investors because it's a great market. It's our expectation for the price per unit, which in 2016, for example, was $75,000 a door, and is now currently about $150,000 a door. We expect that to stabilize a little bit as rent growth stabilizes, but still think it's a great market to get into.
I would agree. I think we have more sales pending or sold in the last 12 months in West Michigan than maybe the previous 5 years combined.
Correct.
Yeah. Joe, thanks for your insight. Appreciate it. Appreciate the data-driven.
Absolutely. Thanks for joining us, everybody.
And thanks to our viewers for joining us. Hope to see you again soon.